Okay, folks, we have just finished the June content for the ICT Mentorship, and I want to take a couple minutes just to talk to you and kind of like a summary of everything that you've been introduced to and exposed to. And I want to ask you, why do you believe I made you go through the content that was shown in June? I believe that some of you felt like filler, like it wasn't necessary, it wasn't needed, or I'll come back to that later on ICT. And it's unfortunate that some have felt that way, because the purpose of having multi-asset class analysis, that is the asset classes of the bonds, currencies, commodities, and stocks, is by looking at them as a whole, how they're interrelated, and all the things I covered this month. I want you to go back through and look for the symmetry between all four, because there's a common theme that I'm trying to draw your attention to, but you can't grasp it and you can't appreciate it until you see it, until you see the interconnections and when they're most likely to be in sync with one another. What am I talking about? Risk on and risk off. See, some of the things that you folks are in here hoping to see right away. I want to see this. I need to see this. I have to be a witness of this, or I have to be taking trades. Some of you didn't listen. And I said it wouldn't be a trade signal service. And I want you to think about, what was the point of all these lessons for this month? It wasn't that I was highlighting certain phenomena that I like about each individual asset class. It's the fact that they both not only work in harmony with one another, but sometimes they decouple. If there's a decoupling, in other words, if the bond market is going higher, that means that there's a scenario where it's less risk interest. It's a risk-off environment. So the market goes to buying bonds. When the bond market's going lower, then there's a risk-on scenario. Risk-on scenarios bring with it the buying of stocks, the buying of foreign currencies. These back and forth ebb and flow type phenomenon have a reverberation that goes through all four of the asset classes. And to discount it, to think that it's something I'll come back to later on, I don't think I'm really interested in learning commodities. I don't think I'm interested in looking at the S&P 500. I don't think I'm interested in looking at stocks. All of you know I only trade Forex. And yet I still talk about the bond market, commodities, and stocks, because it matters. It has a place. And some of you want to be one-trick ponies and I'm only going to be able to make money if I have to just follow one thing and I have to close my eyes to everything else around me. Well, to be a specialist, you still have to understand what the general market's going to do, most likely. And the importance of it is that when the markets are working well together, when all of the asset classes are doing as they should, risk-on environments, everything should rally. Interest rates should be declining. If you're not seeing these things happening, if there isn't this beautiful dovetail with all four of the asset classes, then you're going to have a very hard time finding opportunities where moves can be explosive. They can have a lot of magnitude. They don't last very long unless those conditions are there. And we have been going through a period of months where it's been very difficult to ascertain whether or not the market is risk on or risk off. Sometimes it is, sometimes it isn't. Some of the asset classes are doing as they should, while others are doing something completely different. Some of the folks that are no longer with us have grown tiresome. They don't want to deal with this anymore. It's grinded them down, and they left for a reason. because they're never going to be traders. They're never going to be able to do this because it takes a lot of wherewithal. It takes a lot of conviction. It takes hard work. You got to look at all four of these asset classes to get a grasp on what the general market's doing. You want explosive moves. You want big directional one-sided markets. That's going to come by way of understanding the four asset classes. If you cannot read what those asset classes are doing individually and as a whole collectively, what's the dance between them? Are they moving in symmetry? Are they working beautifully together? Or are we seeing a chaotic mess? The markets are doing whatever they want to do, indiscriminate to whatever the other asset classes are doing. Why would you think that takes place? Why would we see a multi-asset class decoupling like that? Because there's a lot of uncertainty. And when it's easy to make money, and there are times when it's like that, all four asset classes will be working in harmony with one another. They'll be doing as they should across the board. Dollar index goes higher, commodities go lower. Stocks go higher, risk on. Risk off, stocks fall. Currencies, foreign in nature, rally when it's risk on. Decline when it's risk off, and dollar will rally. This mechanism that we look at in terms of the marketplace, it is highly efficient and yet very hard to decipher because it takes a lot of work to be looking at other things, not just I want to be looking at only my euro dollar. I just want to trade euro dollar. I don't care what the bond markets are doing. I don't care about any of that. Can you make money doing it? Yes, you can. Will you understand when the large moves are going to take place and how long to hold on to them based on those conditions? Just looking at the euro? No. Some of you are trying to do that. Some of you are trying to skip to the head of the line, avoid all this hard work because you don't want to roll your sleeves up. And it's necessary. You have to do these things. Because if you don't, when you have periods of drawdown, when you have periods of where the market just isn't giving you what you want, you're going to lose your mind. You're going to allow psychological things to impact your ability to trade, to make decisions, hold on to trades, or let go of them. Because you will have an absence of your understanding about the general market as a whole. I can't tell you the dozens of emails I got throughout this entire month. Can I skip this month? Can I just not worry about this? Can I just pay for the next month and not be a part of this group? And I was saying the same thing to everyone. It's important because you felt that you were never going to be a commodity trader, so therefore commodity information is useless to you. And you're never going to actually trade the bond market, so everyone was interested in what I had to say about the bonds. And it's interesting, as I got through the bond market content, then folks were like, well, do I have to pay attention to the rest of this? Yes, you do. And if you're having a struggling point where you don't want to do this, you don't want to look at the other asset classes because it's too much work, it's too much, then I'm going to challenge you with this. You're going to struggle. You might have hit and miss success. You're going to have periods where you might make a little bit of money, but you will always feel like there's just something that doesn't quite click. And it's going to be this. You have to know what the market's going to do as a whole. And if there is a decoupling and the markets are having erratic behavior, the assets are not working in harmony with one another, it goes back to if that only is going on presently, or we're coming out of that hopefully at the time of this recording, what has it been saying all along? That smart money is not willing to make large contributions to one side of the market or another. Or they're waiting on something. What are they waiting on? I'm not sure what it is they're waiting on. There's a lot of things on the horizon. Some of it's war, some of it's Brexit, Middle East, Trump being in office, maybe not being in office. There's a lot of things that's going on right now that it's making it difficult, and it's actually disinteresting. And I would admit that if I was coming up as a new trader, I would feel the impulse to say, well, I'm really not going to pay attention to this. But I can tell you there's a lot of things that I went through in my development that I felt that way about, but I later went back to them, and it caused me the greatest growth spurts in my understanding as a trader. Part of the mentorship was for you to pay for me to give you the things that helped me get to a point when I can understand what the market's going to do. You can see when I'm wrong. It's been glaringly obvious the periods where I'm not doing well. And it's because of the multi-asset class analysis of these 4 asset classes. They're just doing whatever they want to do. But when there's periods where I can see everything, I can see it clearly, what's going on. Example was this week. I do a lot to do this mentorship. And sometimes my attention's drawn into areas where I otherwise wouldn't be looking. But because I am a mentor, I do my best to try to give feedback and answers to questions by way of email. And some folks are calling me, and some people were sending me texts, and there's a lot of you. And I do all those things and make lessons and do recordings and edit, and it's a lot. And I can only do so much as a human being. I can't force you to do the things that I believe are necessary. You're going to have an opinion. You're not going to pay attention to this teaching. You're probably not even going to listen to this video. Got your fingers in your ears. La, 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 la. I don't want to hear. But it's something that's important. I wouldn't have done this month if I didn't wholeheartedly believe that it was beneficial to your understanding. You'll probably never trade a bond contract in your life. You'll probably never trade stocks. You'll never manage your own self-directed IRA. I guarantee you there's some of us in here that are thinking that, and I understand that. I'm not twisting your arm to do it. But it is important for you to know what these asset classes are doing as a whole, and you don't have to be staring at them all day long. Periodically check them, see what's going on, get feedback from them. They should be moving in concert with one another. There's an ebb and flow that is necessary for the markets to be highly efficient. And when they're efficient, they create big moves, large moves, exaggerated moves, big ones, big, huge, profitable market moves. And they're easy to see coming, as we outlined this week. I took a chance on some things in the last couple of weeks, and I was primarily working off of an intraday 4-hour chart to come away with my analysis. And I said, you know what, I'm going to spend some time with the S&P and not even look at the FX market last week. And it forced me to have a period of time separation from FX. And then Saturday when I did my analysis, as I normally would do, but I'm slammed. There's a lot of slides this month. So there were 200 slides in the presentation. It doesn't take 5 minutes to do that. Some of you folks think that it's real easy for me to do it, and I thank you. I thank you for that vote of confidence that you think I can do these things in 5 minutes. I can't. It takes a lot of work, a lot of effort, and designing it and bringing things together to make it, user-friendly. But I had a member send me an email saying that, I rushed out of here this morning, eager to go on vacation, and I promised to do a US dollar CAD trade. And no, I didn't promise to do a dollar CAD trade. I promised to look at the market, and there would be probably a trade Friday for the dollar CAD. But using the asset classes as a whole, all 4 of them, I didn't see a trade this morning. And there was no trade this morning. It was a Z-day consolidation. ahead of a large, widely followed U.S. holiday next week, but a lot of folks go on the sidelines. By seeing all 4 asset classes, looking at what they've done going into this morning at the time of this recording on Friday, June 30th, 2017, there has no real indication of what the market should be reaching for. It had already met my objective for the week. It already traded down to the low I called for and went just a little bit below it. So it's fulfilled it. If it's already met that target, what am I going to trade? Just because it hit the target doesn't mean it's going to go reverse in the other direction. I didn't feel it could go lower based on looking at all 4 of the asset classes, looking at the targets on individual currencies, the bond market. All these things work together. Some of you don't trust the level of experience I have in terms of time using this information. You watch a slide, you think you know everything, so therefore it has to be this. It's got to be black or white. And I've said this ad nauseum. It's not black and white. There's times when the market will appear black and white, when it seems easy, it's so obvious that it's going to go one direction, and those times will trick you because you'll think that it should be like that all the time. And this is the difficult part about trading. You have to work those times when it's like it, but when it's not like it, you need to dial it back. And the way you be able to determine those conditions is by rating the market in terms of risk on and risk off. And you can't get that adequately enough by just looking at one instrument, one pair. You have to look at the whole universe of speculation: currencies, commodities, bonds, and stocks. This whole month was designed to draw your attention to the importance of knowing what all of them should be doing and what is it you should be looking for. Going into the marketplace, not looking for trades per se, but looking at the commodity market as a whole. Are commodities going higher or are they going lower generally? Are interest rates going up or interest rates going down? How's that affecting the dollar? Is the dollar going up or is it going down? What's going on with equities? Is equities finding an ease to rally, or is it struggling to rally and holding more of a consolidation? All these things matter. They weigh out in the grand scheme of things in terms of feedback. Some of you are learning this for the first time. You've never had any kind of technical analysis indoctrination to the marketplace. There's nothing that you've ever done. This is the first time you've ever done it, and your heads are spinning. Some of you that have been trading for a long time know that there are periods in the markets where it just gets really hard and you can't do anything right. And some of you think that you've traded before, got lucky, and you think you know what it is that should be happening in this mentorship, and you already had your opinion. You came in with a preconceived notion about what it is that you should be getting out of it, and you had no idea what you're going to be learning. It's the same individuals that have discounted this month's content, feeling it as, well, it's something apart from FX, so therefore it's not important, when that's the furthest thing from the truth. Intermarket analysis is absolutely crucial to you understanding what is going to be taught next month. Don't you want to be in the asset classes and those leadership on the upside or downside based on the things that have been taught thus far? Don't you want to focus where all the large institutions are going to be pouring money into it? Because they're the ones that's going to explode. They're going to be moving huge, fast, lots of distance, magnitude, the velocity of these types of moves. That's what you're looking for. You want to find them. And in between there, you want to be able to be a bread and butter type trader. Find consistent setups here and there. Low resistance liquidity runs. One shot, one kills. Low risk, high probability day trade. Swing trade. Give me something I can hold for a couple months. But if you don't understand the relationship of all 4 of these asset classes and what those asset classes should be speaking to you when you look at them. That's what I focused on this month. I didn't give you a top-down, here's the crack course on trading commodities. First notice day, last trading day of the month, contract rollover. I didn't go into all those things. I went and talked about the most salient, important things from each asset class. That's it. Notice what I taught. The likelihood of a directional move per asset class, and the importance of knowing what to look for and when it should happen. What happens when you start seeing just two of the four asset classes doing one thing, but the other two aren't doing as they should? Is that a very symmetrical market? No. But what happens if we start seeing a third start doing it? Well, that's now very interesting, isn't it? Because it brings us to the question of, okay, it's been uncertain now, but now we have a third asset class starting to behave as it should. So we're starting to come out of this chaotic uncertainty. So therefore, more of smart money's money is being put to work, because we are just the flea on their back. They're the big dogs, not us. We're never going to be a big dog like they are. They're large corporations, banks, institutions, insurance companies, pension funds. They're deep pockets, folks. And if you haven't figured it out yet, that's what I'm hunting. I'm looking for that. And if I can't find them, if they're not leaving clear tracks, I'm keeping my hands in my pocket. I mean, that doesn't look good as a mentor sometimes. It doesn't look good as a rock star trader. But what do you think I've been doing for the last 20 plus years? Just keep staying in the game. That. Because if I don't do that, just like if you don't do that, you won't be around here 20 years from now. You won't be here next year. Maybe you will, looking at something else, insisting there's something else out there better for you. Listen, if I'm not teaching it, it's not important. If I'm teaching it, it's important. I don't have enough time in the day to add stuff to what I already do. I don't have that. The time is not a luxury for me anymore. So I made a promise to everyone that I was going to teach everything that I know, and what makes me tick as an analyst when I look at price, what makes me believe that the price is going to behave a certain way. Why do I think it's going to go up to that level? Why do I think it's going to go down to that level? Why do I think it's going to go sideways? Why am I avoiding trading like today? Because of my experience knowing what these asset classes are going to do ahead of a weekend, ahead of a holiday, even though the holiday is not Monday, not Friday, today, it's next Tuesday. And I know by experience what that will do to the markets. And I saw signs of it across all four asset classes today, early. And because I had to do 2 videos today, and I had to do your PDF slides, all those things require time. I'm not trying to hide the workload. I can't hide it. It's a lot. I got to do it. But I can only do it in the 24 hours with sleep and eat and do the things a normal human being will do. And you're going to have to find time to do those same things in your trading. You got to take a peek at these 4 asset classes. You may not want to do it. Maybe your business that you're running, it's wore you out. But why are you going to trade without having a greater understanding about what the market should be doing as a whole? That's nonsense. It's foolishness to do that. So while you may never be a stock trader or trade commodities or even trade a treasury bond, it's important for you to understand what they are doing. What's their seasonal tendency? Are they behaving seasonally? Because if they're not, that means that we have a decoupling. And it's going to be hard for the markets to find a one-sided move with great deal of magnitude. Now, I'm not saying you won't see trades. It's just you won't see really strong moves like we outlined this past Saturday that we saw come to fruition beautifully across many pairs. All of our targets were hit. And they weren't small moves, they were large moves. And it comes by way of looking at all 4 asset classes. Listen, if you don't want to do these types of things, hey, I'm not going to twist your arm. You do what suits you. I'm here doing what I said I was going to do. But for you to understand what the PDF files from the top down work will give you in August, you need to start thinking about these 4 asset classes, because there's reference points that you have to know in relationship to what they should be telling you about the general market as a whole. This is my suggestion. This month has a lot of teachings, a lot of lessons. And I want you to go through this again. And I want you to try to ferret out the points of discussion that I have for each asset class, and then try to draw parallels to it, because if you start doing that, you'll see where I'm leading you to with the PDF files in August. It won't be to the minute detail, but you'll have a general understanding. That way, when you do go through the August templates, you'll have that moment of astonishment where it goes, oh, I got it now. I see it. I see it now. Now you'll go back to the June content and say, oh, wow. Now I know exactly why he was talking about that, why he was showing this. And then you'll feel silly that you felt that this was a waste of your time. So until next time, I wish you good luck and good trading.